Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish but also bearish scenario, as we would expect price to retrace to higher levels before then potentially a continuation to the downside in the bearish scenarios or a continuation to the upside in the bullish scenario. If we look at the bullish scenario first, we are looking for a flat structure where wave C is finished and we want to see continuation to the upside in an impulse. Wave 1 likely finished, looking for 2, and we want to see an impulsive structure to the upside for 3, reaching this high over here, because this high is the invalidation for the bearish scenarios where we're looking for either an impulse down or an A, B, and a wave C down. The invalidation for this bullish scenario is price taking this low over here at 41.4k. If we then look at the bearish scenarios, we are looking at this move to the downside to be a wave 1 or A, followed by a corrective structure to the upside in 2 or B, and then we're looking for continuation to the downside in a wave 3 or a wave C. In both of these scenarios, we would expect price to retrace to higher levels. Currently, price only retraced to the 0.236 Fibonacci taken from the high to the low, which is a rare retracement target for both a wave 2 and a wave B. The common target area for a wave B is between the 0.382 and the 0.886, which is between 44.4k and 48.2k, and the common retracement target for a wave 2 is between the 0.5 and the 0.786, which is between 45.2k and 47.4k. In both of these scenarios, you don't want to see this high taken at 49.1k, and you're going to be looking for an impulsive structure to the downside in either a wave C or a wave 3. Now, it is possible in this wave 2 or B that the low does get taken before a move to the upside, and if that's the case, then I still expect a bounce in a potential flat for a move to the upside just because of the 236 here, and we want to see higher retracement targets hit, preferably, which also has the highest probability. If price is going to take this high again, the probabilities in general are quite high to move towards the golden pocket area, and that is because of this gap on the daily chart. We have a gap over here. You can see that we have candle number 1, candle number 2, and candle number 3 over here, where if you make this box from the high of this candle here to the low of this candle, you can see that this bigger impulsive candle to the downside created a gap. We tested the gap once, tested the gap twice. It increases the probabilities to fill the gap. If price is going to move above this high again, probabilities really increase to fill the gap to the upside, which then means retracing to at least the 0.5 area, if not the golden pocket area over there, where we also have some additional resistance, being the target box between 45.9k and 46.7k. If we then zoom in and look at the local price section, and we look at a scenario where the low is not gonna be taken, but instead we're looking for a 1 or A, 2 or B, and a continuation up in a wave C or a wave 3, we are looking at this leading diagonal over here, which was first posted by Stuba in Discord. Very nice. 1 2 3 4 5. Stuba is cooking recently, and over here we are then looking for that diagonal. Wave 2 retracing to the 786 886 area, common target for a wave 2 in a leading diagonal. Wave 3 ending between the 886 and the 786, trend-based fib extension taken from the low to the high of 1 to the low of 2, which is a common target for wave 3 as well. This wave 4 retraced to the 0.5, also the golden pocket was hit, but both of these are okay targets for a wave 4 as well in a leading diagonal, and wave 5 was also shorter than wave 3, trend-based fib extension taken from the low to the high of 3 to the low of wave 4, common target for this wave 5, 786, 886 area, also nicely respected for then the end of a wave 1 or A, right on top of that daily naked point of control that we were looking for such a long time. In this scenario, we are then looking for a corrective structure to the downside. Common target for 2 is between the 05 and the 786, between 42.5k and 41.9k, taken from the low here to the high of this wave 1 or wave A, and for wave B, the 382 and the 886 are also common targets at 42.7k and 41.7k. If we look at a bearish scenario where we do take the low, but after that we expect a impulse to the upside, remember, to reach higher retracement targets, we are looking for a wave A, wave B, and then a wave C, where the common target for B is pulled with a fib from the low to the high of A, sitting between 40.9k and 40.6k. In this scenario, however, wave A has to be a 3-wave corrective structure, and it is quite challenging to get a nice corrective structure in here. If we look for an ABC, we're looking for a 5-wave structure in A, complex in B, and a 5-wave move in wave C. However, locally here, wave C is clearly not a 5-wave structure. This is a 3-wave move to the downside, and we don't like to see that in a wave C. If we look at the blue count, we're looking for a zigzag in wave W, X zigzag as well, and then we need a wave Y. But because W is a zigzag, wave Y cannot be a zigzag. It can only be a flat structure in an ABC, or it can be a triangle. But clearly we don't have a flat structure here, and we also don't have a triangle. If we now look at the pink count, we are looking for a WXYXZ. The problem with a WXYXZ is that a WXYXZ is a very, very rare corrective structure and never has the highest probabilities unless all of the other scenarios fail. Now previously we also had a discount on the chart here where we were looking for an impulse to the downside in a wave 1, 2, 3, sideways 4, and then a wave of 5. This high over here had potential. It was made on the 0.382 and was also made between the 3 and the 4 fib time, taken from the low of 1 to the end of 2, put on the end of wave 3 here. However, price made now a higher high after the 5 fib time, and the color is red for a reason, as it lowers the probabilities that this range here is a wave 4, as this wave 4 is incredibly long now. The retracement target is correct, 302 to the 05, didn't yet hit the invalidation, being the 618, but time-wise, this wave 4 has low probabilities now because it is so long. If we look at this local range, then I have this volume profile on my chart over here. The volume profile is pulled from this little order block to the end of the range where we are at the moment, and we have a clear support resistance area at the bottom, and we also actually have a very, very clear support resistance area of the top, which is basically the order block I just mentioned. And price is of course in a ranging state. Currently we are at the point of control. The value area low is at 42.5k. The support area here, being the white box, is 41.9 to 42.1k, and the resistance here 43.2k to 43.4k. Currently we don't have any CVD divergences after the recent high. Of course we still have bullish CVDs over here, but because the bullish CVDs already played out, the bullish CVD here played out with this high after the highs got taken, price then retraced, created more bullish CVD divergences, played out when this high was taken over here. So preferably we're going to look for any bullish CVD divergences on the right side over here more locally. So if we then look at the probabilities of the different scenarios, then on the low time frame, the probabilities are currently higher for price to move to the upside. However, we are neutral when it comes to this move to the downside here, where we're looking for either wave A, C, or 1, but the retracement and the price action that follows will give us more information. Wave 4 at the moment is very long as explained, which lowers the probabilities. This is a wave 4 for a deeper wave 5 to the downside. On the micro, which is the local range here, a currently leading diagonal looks better than the corrective structures, but we want to see a corrective move to the downside, of course. If price is just going to do this all the time, right, then we are not looking for support and we're going to be looking for the lows to be taken. If price takes the lows, then I would still be looking for a bounce back towards the upside, as we want to see price hitting the higher retracement targets as mentioned at the beginning of this video. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.